Good morning, good afternoon, good evening, everyone. It's Taylor Watts from Watts Investing, and today we're doing our usual monthly update, talking about dividends, doing a portfolio update, and just keeping up to date with the usual. So, kind of a big update. We've hit our dividend investing goal for the year of $5,643.00. So that means we've invested $21,000 in total at the age of 21. So that's a pretty big milestone to hit. Pretty happy with that, and we've hit it quite early on into the year, a month and a half early. So that gives us some wiggle room to save up some cash or just to keep investing and push past the goal. We've obviously got a bit in the wallet sitting around, and of course we're going to put that into our usual dividend growth stock, Triple M. So over the past few months, our subscriber count has kept at around 300. So we've got no subscriber growth to put in as $1 per subscriber today, but we've been starting to do $25 per video as well as we incentive for me to do a monthly video as much as I can. And so since we're doing this before the 17th of November, this $25 will be going towards some dividends, which will be cool. So those will be paying out in December, increasing our December payout, which is exactly what we're wanting. In terms of our portfolio, it has been hitting the ringer quite recently. Ignore that we dropped there, that's just the Tesla stock split. But at some points we were up 4 or 5 grand in the past 3 months even. Hitting some highs, hitting some lows, and recently the macro economy has been quite volatile and not in the right direction in terms of our portfolio. And Tesla itself has been getting absolutely hammered, but it's been both a good thing and a bad thing. I'm trying to purchase a house currently, so in terms of my deposit being mostly stocks, it is quite annoying having it drop. So we're figuring out ways around it, but we are dollar cost averaging more and more into it, especially at these levels down here as well. That's why there's $200 sitting there waiting for tonight possibly. And so we've been getting hit into the low 1000s and under 1000 in returns, and the only thing keeping us up is that exchange rate, because transaction fees and unrealized gains are down quite a lot. And the fees are just from purchases and selling. I don't think that includes our subscriber fee from back in the past, like 2-3 years ago. I don't know if this return even counts that. But in terms of our dividends, we're going to cross over the $600 mark this year, which is pretty cool. And I'm actually not sure if Sharesies has that number completely right or not, because we've had 549.30. Yeah, so apparently I'm missing $30 dividends there. Actually, I haven't included October or November's, so that actually might be the difference, roughly. So there's about $6 difference, and that can just be, since I've had hundreds of dividends, that can be the 1 or 2 cents off. Our portfolio, we've been increasing our investments into everything, and not much has changed really. We've hit some pretty big numbers into Tesla at 3,600, and the Tesla stock split happened a few months ago and tripled our shares but thirded our share price, so that's been pretty cool. For December, we'll be expecting a pretty massive dividend, because December last year was about $70, so we're hoping for around the same number, because that'll have us, including October and November dividends, that'll have us hitting probably about $300, which would be pretty cool. Pretty big news is, of course, how much in dividends did we receive in October. Sadly, we did not hit my guess of 15. We hit $10.78. So that is a little bit below. Sometimes it's because this monthly paying stock here, it doesn't pay actually on the month. It sometimes pays twice in the next or the previous. So as you can see here, it paid pretty early in November, and if we included that, I guess would have been pretty close. But without it, we're pretty far off at $10.78. So if your November guess was sitting around $5 or $6 below, kind of change your answer now. because it could be a bit higher now, because this might pay out twice in November or December. Don't actually know. So November is already kicking off to a great start. I think we've got Colgate, Procter & Gamble, Vanguard has just paid us actually, and Realty Income Corp. So we could be sitting around 15, 16, 17. Yeah. So in terms of my guess, we'll be changing that to 17.50. And in terms of dividend guessing, I don't know if we had too many. We had an 18.50, and I think that might have been the only other guess other than mine. So 18.50 was a lot higher. Would have been hoping for it, but we were only at $10.78, was it? Yeah, $10.78. So we can input that into our chart now. Boom. Crossed over the 200 mark for the year as well, which is pretty cool. And that will be increasing our quarter 4 number as well. We haven't actually got this going yet, so I actually will put that in now just to start off. Boom. So now we'll have our quarter 4 number on this chart if we include it in. So let's go in A10 to B25, which of course should be now 26. So it'll skew our graph a wee bit for now, but of course we do have November already at $12, so it'll be boom, bouncing it up to the 25 line, and then of course the December will maybe actually cross 100, which would be pretty cool for quarter 4 in total, because our biggest has been 96, so beating 2021 quarter 4 is our optimal goal, as that big 67 was there. It will be tough though, because we did sell out of Westpac kind of at a good gain to buy into some companies that were dropping off, like Tesla, Apple, Microsoft, big tech stock drop-offs to take care of some good dollar cost averaging down. So that will decrease our dividend by about $12 in that case, but we have increased our monthly stocks and our other stocks that pay in December, like Main Freight, Fisher & Paykel, and things like that. So it will be interesting to see what the actual number is. Yeah. So in terms of our graphs, I've actually managed to fix these ones. What was happening is when I spread them out to do to line up with the actual start of the month, pretty much. Apart from this bit here, it's a bit messy, but essentially this lines up with the start of each month, and that's just to keep it nice and easy on my brain. And then I've squashed it down, so I have to scroll 300-400 lines. It's heading towards 400. And I've actually managed to fix it. Just when I squashed it down, just all of the averages and kind of the trailing 6-month averages was just all using the wrong numbers, so it was kind of doing a weird funky thing. So I've actually fixed it now, and our monthly average dividends is heading up towards $13, with October kind of getting up there as well. November numbers aren't currently in here, even though we've got $12 of dividends. Just wait until the next video to add them in. Our dividends per month is still pretty sporadic, but as you can see, generally the lows are getting higher, the average little medium bounces are getting higher, and hopefully we'll be hitting higher highs as well. And just kind of making this graph look more like these graphs is kind of the overall goal we're trying to achieve. Diversify our dividends across multiple different companies and get it to be a bit more consistent and safer in a way. Our total dividends received over time again is getting up there, including November. We're at about $5.70, so that's about $9 difference to what Sharesies says, I believe. So it's a little bit different. Some taxation and just those little 1 cent, 2 cents off an exchange rate kind of calculations will be making the difference, because I kind of just, whenever I notice a dividends paid, I go to the exchange rate, just USD to NZD, and just put it in like that, because generally I invest the money, the US dividends back into the US company, so there's no actual exchange happening. Just the exchange rate I use will be multiple or the same cents off. So that's probably where the difference is. So that difference will get bigger and bigger over time as more transactions happen. Our trailing 6-month average is kind of following a trend line of decent growth, so we'll be heading towards 30 possibly over November, December. Of course, with December bouncing it up quite a lot as December hits here, it went from 10 to 16, and then December here it went 13.5 to 21. So December will probably bounce this trailing 6 month and cause a drop off as it falls off the end of the 6 months in July of this one, because I think that's roughly when it drops off. June actually. Yeah, June is when the big December drop off happens, and it happens in June again, so that'll be when it happens again this time. Trailing 12 month dividends, just adds the last 12 months of dividends together and gets that accumulation number for us. So that is crossing the line of 300, which is kind of where we're heading to finish this year off with, which would be pretty funny actually. Yeah, that would actually be pretty funny if we land bang on 300, because the trailing 12 months will be the exact 12 months. So it would be cool if we did get to 300 for this one. As it's kind of weird looking at it, because currently it's like only $15 off. We've got $13 dividends, but that cuts off the last November of the 12 months as we include the new one. So we'll cut off that 11 and swap it for $12 something. So it will only increase $1. And then for this one, if we get 70, it'll only add another $3. So we need to add 15 surplus onto those two numbers into our new November, December. So that'll be interesting if we can actually get there, looking at it that way. In terms of weightings, we updated these pretty recently. So this has our portfolio at market closer to 22,000 now. That was heading upwards of 25 at the good periods, or even possibly more. But this is roughly where our standings are coming. So Apple is actually creeping up on Tesla a wee bit, just because it has more positive returns. And we have been getting a little bit of dividends from them and just doing investments maybe at better times as well. And Tesla has been dropping off about 40% this year. A wee bit of diversification in the top 500 companies is actually coming along as well. Hallensteins is sitting there nice and even, just paying us those dividends and just getting a really great return on investment with that one. Triple M is up and coming as well. That's going to probably cross over these two by the end of the year. I can definitely see that happening. Microsoft is one that I didn't expect to be this high in terms of all our companies, but it's just been really having good numbers in terms of its earnings reports and growth figures, and also the macroeconomy causing the stock price to drop is just causing me to buy more of it than I expected I would have. So it's actually quite cool to set up there. And then our high risk monthly dividend payer is actually creeping up as well. I do like this one quite a bit because if we come over here, we can see the dividends just getting really, really insane actually, because this one's growing just insane, because we get 15% yield-ish on that, so it just grows really quickly, both from our deposits into it and just the dividend itself. Because now we're at a point where we're buying, I don't know, a third of a share each time we get a dividend. So we get, if it's paying 20 cents a share each time we get a dividend, it increases by 6 or 7 cents just based on that. So by, I don't know, end of next year, say that's at $10 or $12, we'll be getting 12 cents a share, kind of compounding onto that. And then in a few years, maybe say this is at, I don't know, in a few years time it's hitting 40, 50, we'll be buying, if it's at the same share price, 2-3 shares. So we'll be growing 60 cents per month at that point. So this is growing, what, 60, 30, ignore half of that one, 20, 50, and then it jumps up, then grows at 20 or 30 cents. So that could be saying $1 or $2 growth per month, and then that basically means if it's growing $1 or $2 per month, we'll be growing 10 to 12 per year kind of thing. So it'll just start going from $50 to 60 to 70 to 80 to 100, and it'll just be really cool to see that one over time, if it does play out that way. Similar to this one, just a lot lower yield. We can see just it's basically just this at a smaller scale, and we've been depositing more into this one, so there'll be bigger bumps, but it is cool to see it start off at 20 cents and just slowly go to 30, 40, 50, 60, 70, 80, 90, and then of course 100. And then we've got Realty Income Corp kind of being the middleman between these two in terms of yield as well, and just starting at 30, 40, 50, 60, 70, 80, and quickly getting over to 2 as well. And most of these are based on our actual money input, but it's cool to kind of think about what the actual dividend effect is on some of these, and especially some of these big ones where it's paid like $30 or more in dividends, just being like, oh, that's a share or two, and just being like, oh, that's increased the dividend by that much. And then say something like Hallensteins have received maybe $100 in dividends, and that's 20 shares, which is like, I don't know, $5 in dividends or something, which is just pretty cool to look at it that way. So it's like, I don't know, that would be 20 without all these previous dividends or something. It's just a cool thing to rationalize and look at, and just understand that that's what your portfolio is actually doing in the background. And it's good to see all of these going up in a general trend and at quite a steady or quite a high line. There's not many that are actually on a flat line. Like one of our flatter ones is probably AT&T because of the spin-off of Warner Brothers Discovery or whatever it's called. So that one flattened the line a bit, but over time this will spike back up again. And then some of them will be flat based on our lack of deposits into the company, because that's most of the growth from the dividends, something like McDonald's or Colgate. And then some of the sharper ones are just like Fisher & Paykel's pretty sharp in terms of the line, and some of that's just because the first dividend was really small, and we've bought this as it's dropped 30% due to COVID and stuff like that. We've bought into it, so the dividends have actually gone from 30 cents to $1.50, so that's times 5, and then increased another 40% or so onto that, just doing the same thing. So some of the lines are just skewed based on that, but it is cool to rationalize what's happening with these numbers. And it will be cool to see if Tesla gets involved in the dividends in the next 5 to 10 years or more. So my invested number I've got here is slightly different to Sharesies one. So the 52 missing might be that subscription fee I paid when we had that monthly and yearly subscription fee back when I first started. That might be the difference of invested, because I don't know if I don't actually know why my numbers are slightly different to what Sharesies has got, because I set that goal here to be lock on 21,000 or something, but then I'm obviously $50 off somehow, so somewhere in the road the number is off, and I'm going to have to choose to either go by mine or theirs to make it exact, or just to think that I've done it right and theirs is wrong. Mine is probably wrong, but it's the way I've consistently been doing it, and I don't know where the mistake is, so it's kind of hard to find. It will be cool to see if this dividend yield is sitting around that 1.4 again, because let's say that that's 300, it will be, yeah, pretty much right on there. So let's put that back to E43. It will be right on that 1.43 if we hit our 300 mark. If it is slightly higher, that 1.343%, that means something's working if we're a bit higher as well. So that's pretty cool. And so our November guess is 1750. If you're looking to have a go at that, feel free to leave a comment below of what you think I'll receive in November. Currently sitting around 1235, I believe. And if you do leave a comment, like Project Frugal here, if you do beat me, you'll get a shout out. Project Frugal's won a few times, and I'll just give them a cheeky shout out now. They've generally been uploading, I think, fortnightly updates of their road to $100,000 invested or total value as well, and they have quite a cool custom spreadsheet as well. And then in between their investment updates, every fortnight they do a bit of day in the life stuff, DIY, and just some other stuff. So it's quite cool to check up on them every once in a while to see how they're doing. And they've actually just uploaded a video today, so I'll probably watch that once I finish recording, just to see how they're going. And I've got a few regulars commenting now, so it's cool to see those guesses coming in. And yeah, so mine's 1750. Always hoping it's higher than my guess, because then I'm wrong in the right direction. Unlike this month where I was wrong in the wrong direction. Yeah, our net worth over time chart is coming along quite well. So we can see here was our peak negative net worth, and this was kind of in the middle of our last year of study, and then we slowly brought it back down. I think this was maybe when the stock market had an amazing month. Yeah, because that's a big $4,000 difference. We might have sold some things as well, and this I think it might be here. Yeah, so this month here was one of our lowest net worth ones recently, but it was where we're at peak debt, so peak amount borrowed essentially, and then we had some bad stock market months as well, and finished uni, didn't have a job originally, was moving cities, so a lot of costs, bond payments, rent, and stuff like that, and buying some furniture and stuff, so that peaked back up to there. Most of it was stock market induced as well, and then we can see paying it off as we get a job. And then this month here was friends coming to Aussie, so it's bumping it back up, and then just starting my new job now, we're pushing it down quite fast now, so I'd expect by halfway through next year, or even sooner, yeah, probably sooner than that, to be dropping that off straight back down to zero, and then flipping the graph over, which will be pretty cool. I'll figure out how to change the colour as we flip over. I'll probably make this red and the upside green or something cringe like that. Yeah, so it's pretty cool. And yeah, I think that's our general portfolio update, our general yarn for 20 minutes or so. There will be a cut earlier because I had a wee bit of a scratchy throat when I was talking about us crossing over the 200, so just had to reset, have a drink of water. But yeah, it'll be super cool to see our dividends for the quarter over 100, this over 200 now, hopefully over 300 by the end of the year. And of course we get to introduce a new colour next year, which will probably be green, or I don't know. It's not too many colours left that will stand out, because I mean, could probably get and make that more of a red and get an orange in there, or you know, maybe we just have to make the colours a little bit different in the past years, just so we can. Oh, we could actually make it into a rainbow, which would be kind of cool. We could, yeah, because what, 7 colours in a rainbow, 7 years, that'll last for, you know, what, we're at 4, so that'll get another 3 years on the chart. So maybe we'll just start change this to be a rainbow, which will be quite funny to look at, because it'll cascade, just rainbow. The only month that'll actually look any good will be December, because that's the only month with any dividends for 2019. So that'll be quite funny. Yeah. Alright, that's me. Feel free to leave a guess in the comments below. And yeah, I'll be keeping my investments into Tesla, and I'll keep you updated on the house journey, as we might be closing in on something pretty soon. So this is now smaller, had a list of about 30, and then lots of them have been selling. We made an offer on this one, but it went for a lot higher than we were expecting, just yeah, based on it being a 1-bedroom 40-metre cottage. It went for I think the agent told me close to $500,000, which we were not expecting, considering the roof on it was actually very badly damaged, and the condition of the land was quite wet, and it had a leaking drain on the side of the property here, as you can see. So it had some things wrong with it, and yeah, I think we offered high threes. Yeah, so we were expecting to maybe be the highest offer, but there was a lot of offers on it. There was 9 offers, so that was actually quite an interesting learning experience. We were kind of keen on this one, but we thought it was out of price range, and because of the price range difference being probably 200,000 or more, we had to get a bit more nitty gritty with bank applications and deposit numbers and stuff. yeah, this one we thought about, but the maintenance on the external was a bit hard with weatherboards and a pretty damaged roof and stuff, so just curious to see what that sold for. This one, just might have a look at it. It's probably out of price range as well, but might just have a wee look. But the one we're actually looking at is not currently on Homes because it's a new build, so it's not actually got an address or anything yet. So can't watch it on Homes, but watching it on Trade Me. And yeah, so I'll keep you updated because that will probably have an outcome by the next video if we do something about that. Yeah, so that'll be interesting. So I'll either have all my stocks or not, or we'll sort something out. So it'll be quite an interesting contrast this video to the next one. Yeah, because as you can see, we were looking at heaps, and we actually saw the price on this one. It got released, so this one went for $7.15. Yeah, it's one of the first ones we looked at and really liked. But we weren't going to offer $7.15 because again, the roof on the whole house was pretty bad. The house had no eaves, so it was a leaky home, and the balcony had been recently repaired from leaks, which means possibly the walls of the house have actually got some damage in them as well, and the roof's very hard to access, and it's quite a massive property to manage, so probably not a good idea for just me and Trish starting off. Yeah, in terms of our property inspections and stuff, it's going well. We're learning a lot and getting down to our final options and getting quite good and picky with what we're after. So yeah, that's the general update, and hopefully Tesla does stay along this $200 line for quite some time as I invest more and more into it, because yeah, based on the numbers, 56% up on revenue year on year, net income 100%, so that's definitely showing their capabilities of increasing revenue, but actually capitalizing a lot more on the income of it, with their economies of scale, their earnings per share also doubling, and their net profit margin increasing as well, with new factories coming in, which are quite high cost compared to revenue numbers as they're scaling up. Yeah, the stock, I'm pretty sure the stock went down after earnings, like 7 or 10%, because they missed on revenue and some other things. And I'm like, sure, they missed on revenue of 2% or whatever, but they grew at 56% year on year. So like, did they really miss on earnings? Because they've said they're going to grow at 50% year on year, and that's during on a quarter 4, or like trailing 12 months to the 12 months prior kind of thing. So having 56% quarter 3 to quarter 3, it's pretty impressive. And yeah, I'm still following Tesla quite closely. I'd say the stock's better than it was a year ago by far, or the company rather. I'd say there's a little bit of overhang of Elon Musk and Twitter, since he is spending quite a bit of time, or at least it looks like he's spending quite a bit of time on Twitter. But I don't know his day-to-day schedule and what sort of delegation and power and kind of input he has on Tesla compared to all the employees and higher ups there. So I don't actually know how big of an impact the Twitter thing's having. He is selling a bit of Tesla stock to fund Twitter, and through some leaked emails and some stuff that I've been watching on YouTube, it seems he sold more than just Tesla to fund the purchase. He's actually sold some to save the company, is the quote. So that could be by buying it or by funding its operations. So that'll be interesting. But of course, Tesla did announce a share buyback kind of thing that they might do next year. So and I'm pretty sure that's bigger than what he sold for Twitter. At least the most recent sale of 4 or 5 billion. I think he said they'll do 4 or 5 billion for Tesla next year. So kind of equals out in that way. Their forward PE ratio is now in the 30s or 40s, and the current PE is at 60, so it's actually getting cheaper and comparable to, I think, Nvidia or something. So yeah, I'm going to keep buying Tesla and keep putting my money all in one company pretty much, and we'll see how that goes, see if I'm right, see if I'm wrong. But yeah, I'll catch you guys probably in another month's time. Keeping these videos pretty casual, and kind of the upload time's pretty random, as just pretty busy trying to sort out house, getting the ropes of the new job down, and things like that. So yeah, I'll see you guys next time. Ciao.